We now move on to the next plenary of the summit entitled Indian Financial Inclusion Story 10 Years of PMJDY and Beyond. This session will highlight India's financial inclusion story's progress over the past decade. Initiatives like Pradhan Mantri Jan Dhan Yojana, which have played a significant role with opening millions of bank accounts and ensuring access to financial services. Mobile banking and the unified payments interface have revolutionized digital payments, while Aadhaar has simplified identity verification. So we're all set and we are ready to start the session. I'll request you all once again to please kindly be seated. A very warm welcome to Ms. Shinjini Kumar, co-founder SALT. The esteemed speakers of this session are as follows. We extend a warm welcome to Mr. Prashant Kumar Goyal, IAS, Joint Secretary, Department of Financial Services, Ministry of Finance, Government of India. Mr. Vinay M. Thonse, Managing Director, State Bank of India. Ms. A. Mani Mekhalai, Managing Director and Chief Executive Officer, Union Bank of India. And Mr. Munish Sharda, Executive Director, Axis Bank. A very warm welcome to all the esteemed speakers and the moderator. I now hand it over to Ms. Shinjini to take it over. It's over to you, ma'am.
How do we hustle some crowd in? Huh? Okay. People are having their tea, so we hope they will flow in gradually. So welcome to this session. I have a really, it's kind of courteous to say esteemed panel, but I really feel today we have people who will bring in very interesting and very senior level perspectives, which I think will be useful to all the practitioners in the field. So I really do hope that people will flow in gradually and benefit from this conversation. I am going to dive into this subject of what has PMJDY taught us over this period of implementation that most of you, I'm sure, have been a part of one way or another. And what have we learned from this, as well as what is the way forward for this massive effort which this country has already started, impressed a lot of the world with it, and it will continue to travel on this journey because it is very critical to the country. So I'm going to start with, with a round of question to all my speakers, which is going to try and arrive at a scorecard that we can give to ourselves for this implementation effort of PMJDY. I will also request all my panelists to not limit ourselves to the achievements, but to also focus a little bit at least on the learnings and the difficulties, but not dive into the way forward, because we will come to that in the next round of questions. So can we start with you, Munish, from that side, and then we'll come back in.
Thank you, Shinjini. First of all, thank you very much for having us on the panel and for this important topic. Financial inclusion in India in the last decade obviously has made rapid strides and across multiple variables in the economy, starting with the Prime Minister Jan Dhan Yojana, opening of bank accounts, UPI infrastructure, the payment infrastructure, and when it's gone really deep into the country, we've seen the direct benefit transfer, taking the middlemen out, the power of collectives going deep into the economy on the agriculture side. I think that all of that has improved the financial participation quite a lot over the last decade or so. And as a result, we've seen the income levels rise at the grassroots level, and various things have happened. But there are challenges that are there, and like any system as it evolves, we are seeing that from our perspective, the first step has been taken of getting people onboarded to this financial journey. But I think a number of other imperatives remain for the India's financial services, financial inclusion journey. And some of the imperatives are, how do you ensure that the data that we get from these customer accounts and the transactions that they do, how do we use that data to actually help more credit flow into the economy? Because at the grassroots level, people don't need they need saving accounts, and they need to come into the formal system, but they need more credit. Credit delivery has to improve at the grassroots level, and I think there's a need to think about that as to how do we use that data, etc., to improve the credit flow. The second is, in the as I travel deep into the country, I see the lot of risks that are there in the life of a individual who's actually trying to make ends meet on a day-to-day basis. With all the changes that are happening, the climate changes, the weather changes, whole lot of other uncertainties that are there in people's lives, etc., crop failures and stuff like that. I think there's risk mitigation also has to go deeper, and I think insurance has a bigger role to play in these in the evolution of financial inclusion, so that the entire thing becomes more sustainable in a way. And the third and the very important thing is ensuring that how do we build trust in the entire system, with all the challenges around data security, mule accounts, and if people get, if they start banking on a system and they get cheated or something wrong happens, you lose that, much gained trust over a period of time, right? So how do we strengthen that architecture to ensure that people build more trust in the system, and then they can just blindly go and do banking, etc., and and they don't not worried about their money, especially senior citizens, especially people who are gullible, who are doing it for the first time, and stuff like that. So the while we made, in nutshell, we made substantial progress. I've seen, and to give you examples, I've seen in my own lifetime in the banking sector, people actually going from being nothing to become large business, players in their respective sectors. In farming, you start with the trading of some fruit, you start buying land, you start growing the crop, you actually start becoming bigger, because credit actually kind of supports you at various points in time. So while we made progress, I think much work yet needs to be done to build more confidence and to really become a truly financially inclusive country and be at the top of the charts.
Sure. So, Manish, I will break the order that I had originally planned, because a lot of what you are saying speaks to achievement but opportunity for future. But I want to go to Mr. Goyal and ask him that when you hear that in the last 10 years we made progress, but these are the opportunities. Can you go back in time and tell us that 10 years ago, when we thought about PMJDY, we also thought about things like secure, risk mitigation, or things like credit, for that matter. It's not a new opportunity. It has been an opportunity for as long as PMJDY has been implemented. So, what were your goals at the time when we started? I mean, not you personally, but as a part of the government. And where do you think these opportunities, stand today versus what we could have already done or what we have already done?
Uh, Thank you, Shinji. Uh, in 2014, when we started on the journey of PMJDY, almost 10 years back, the goal was not only opening of the accounts, the goals were multifaceted to improve the access to the banking. That time, banking was concentrated in urban cities and big rural areas, like where there are markets or like block headquarters, those kind of places. Second was access to credit, access to insurance, micro insurance. And if we go back in time, actually the mindset of the banking community was very, very different, and equally different was the mindset of common people vis-a-vis the banking sector. If the banks were to extend credit, like the traditional way of assessing a person's credit worth was there. Opening account was very, very difficult. It was said that poor people are not bankable, they are not credit worthy, and definitely there were not many credit products for them, not many insurance products for them. So that's why PM Jivan Jyoti Bima Yojana, with a term life of cover of 2 lakh, then accident life cover of 2 lakh under Suraksha Bima, Mudra Yojana, where it was said that collateral free loan will be given. Before that, collateral free loan was not even considered, like bankers would have shied away. But that one scheme, which is the overall part of National Mission for Financial Inclusion, we call it PMJDY Yojana. So now that has, if we come to today, like we are saying that, okay, depending upon the cash flow, we are willing to lend on the basis of UPI, their cash flow. So all the without any kind of security, and then that is translating into like different kind of institutions, MFI, NBFC. So going into the field and covering these people which are earlier not covered under the credit pool. So I think a lot of things have been done to change the mindset of the population, which is now being more demanding for the accounts, for banking services and credit, and also of the bankers.
So, sir, you bring in a really interesting point, which is about the shifting the mindset of the supply side, because I agree that that's who does the work, and we have two of the largest ones sitting here with us. So, if we can start with you, sir, because SBI, what is it that we learned and what is it that we achieved? If you can give a little bit, and then, ma'am, you can talk about what we've achieved and where we would like to go.
Yeah, thank you, Sinjini, and also Access for getting us here on this very critical topic as we move towards Viksit Bharat. It all falls in place if you see how we started in 2014 and then. Now, for us as public sector banks, we actually do not think that we are going out of our way. Mr. Dave in the morning was talking about what we can recall as the first step of financial inclusion was the bank nationalization, right? In 1969. I go way beyond that, way behind. 1955, when the Imperial Bank was converted into the State Bank of India, the mandate given to us at that time by the government was reaching out to the underserved sectors and reaching out to the unbanked areas. So I think the first step was that towards inclusion, right? Now, when we come to this point, I will just touch upon a couple of figures. 53 or 50 crore, 50, almost 54 crore accounts now covered, and 80% of the adult population already covered. I mean, something amazing. And the numbers also, the amounts, the balances which are in the accounts also has been growing. That means that it is not just used for DBT transfers and then withdrawals today. I think this is an important move which we must encourage. We must ensure that these are not just DBT accounts and then we move them in towards the full service accounts, right? This is one thing we have in mind. All of us, I also say this on behalf of the banking industry today, right? This is what all of us are attempting, endeavoring towards. Now, second part is this not only, I'll come to the learnings a little later. See, what has actually happened, it is not just about this, not just about DBTs or withdrawals, not just access to the formal system. What we've also observed, we have our SBI research that shows us today that there has been a socio-economic impact too. And in 3 of the states, I have with me Uttar Pradesh, Maharashtra and Haryana, there has been a lagged impact of the usage of the PMJDY accounts and a very positive impact on small-time thefts and other crimes. This is very insightful if you look at it. States like West Bengal, Tamil Nadu and even Kerala have seen a continuous impact of the PMJDY since inception of these accounts. So today we have a fairly good sample which shows us that things are improving even on other sides, not just the financial side, right? And like intoxicants, I mean, these are also people are moving away. Now, one aspect which comes to my mind, if you look at the learning part, is how can we impart financial literacy? I think every second speaker this morning was, mentioning financial literacy. This is very, very critical today, and this is one learning for us. Though all of us have been endeavoring towards this, this has not been enough. So this is where you see the accounts, particularly the inoperative ones, being taken over by the fraudsters and are used as mule accounts or something. I think financial literacy will help these aspects. And then, of course, moving into the micro insurance or the micro credit later, eventually moving towards maybe micro investments also. This is a learning which I have.
Great. Ma'am, I saved you so that you could close this round with learnings and a scorecard.
Yeah, thank you, Shin. Actually, this 10 years, this decade of 2014 onwards was a very transformative era for Indian banking, actually. And it was like a very impactful initiative where we could, see the rural and the urban divide, actually closing. We also saw one more thing was, 56% of the accounts are held by women. So this, we talk about women or Nari Shakti, women empowerment. So this also allowed that to be done. Plus, what we have also seen is the saving culture also started. Now we talk about some 4,300. That's a kind of average balance that's lying in the accounts. Now, these are some things that really have transformed the financial journey of India. Now, when we talk about the various issues, like inclusion was one part of it, and as Tonse also told that the inclusiveness, not only the inclusiveness, the empowerment of these accounts, that's what is important. Now what we have to really look at it is the holy trinity, what we called the Jandan account and the Aadhaar and the mobile banking now should move on to UPI and the ULI, that is, and the account aggregators. Now this is where these accounts have to be empowered by using various other channels to empower these accounts like loans and all these things. Now what we have to do is in these accounts we need to do something like strengthen the digital economy in this country. Now digital while you do the digital economy, while you strengthen the digital system, the UPI, the ULI, the account aggregators, these are all necessary to see that these accounts are actually empowered. These accounts are not only being used for saving but also being used for transforming their lives. Secondly, I also wanted to say that here the rural India or the PMJDY account holders are usually the rural India, and these are the accounts where MSME should take a big role in this sector. Now, if you look at India, almost like 530 billion MSME, there's a credit gap in MSME. Now, micro segment, the micro MSME segment cannot be used in these segments. While the government has taken lot many initiatives like the PM Swanidhi, PM Vishwakarma, can we do much better than this is a question that all of us need to ask ourselves. And another point that I would like to talk about is, yes, budget talked about something called the Gyan. That is the Garib, the youth, the Annadata, and the Nari. Can we address specific issues in these segments to empower these accounts? Now, for Nari, of course, we are doing a lot of things. The Prime Minister also the other day announced the Bima Sakhi, that's something like that, which we were talking about. Can we do something really more for the youths and for the Annadata, and to see that these accounts are empowered to, and further their aspirations, further the aspirations of rural India? That's what I love.
It's do you want to add something, sir?
Yeah, Shinjini, I forgot one point. You're talking about a scorecard, right? Now, if we look at maybe on a scale of 1 to 10, I think we should be somewhere around 7.5% of achievement. And what is this 2.5 left? This is the most difficult aspect now as we come to when we look for the next billion. Next billion, I mean not in numbers, but as a concept. Now, this is where we need to reach out to the last mile, the last village, the last hamlet, the last household. I think this is the most difficult part. And we need a lot of support from a whole lot of organizations. Of course, today we have regulatory and governmental support, but then we need to get in the digital aspect also. When we move into digital inclusion, I think that is when we achieve a 9 or a 9.5.
Very, very interesting. But without getting into explanation, do you agree with the 7.5, Manish? Or you have your own number, put it out. Yeah, 1 to 10.
Yeah, I would say 7 to 8 is the number.
7.8?
7 to 8 is the number, Samir.
Okay.
Actually, I would like to give a little less than that
Okay.
because it is
Number.
just not the numbers that we are looking at. You know, now, okay, we have covered 54 crores.
6.5?
Yes, 54 crores of accounts we have taken, but I was just talking to Mr. Goyal also then, how do we include more number of people here? You know, 18 years and above, how do I get into that data? Whether, you know, this 54 crores can mean that there is some duplicate accounts, there are multiple accounts, there are issues in this.
Quality
How
of
do you
data.
clean up?
Okay.
How do you clean up this data and really get the right numbers so that we can, you know, really
Munesh
give a
wants to
score?
defend his 7.8.
No, 7 to 8. I said, I mean, see in transformation of anything in a country as large as ours,
Yeah.
the initial part is always the most difficult, right?
Yes.
You know, you have deeply rooted habits of the money lenders, a load, a lot of stuff happening on the ground. For a country to change it in just one decade,
Yes.
these habits and practice, I think is a very difficult part, and I
I
think
don't
we've
have a
done that.
watch.
We've done that heavy lifting now in the last decade or so. Uh, but having said which, moving it from 7 to 9 is a tough challenge. I mean,
Sure, sure.
it will take something for it to from
Sir,
go.
any final word on the scorecard before we move to the next? Because I'm being nudged to move.
I think it should be 7.5 to 8.
Okay. So now what we'll do is we have an audience now, and I can see two types of people who have gray hair and who have been part of this decade where we have all the self-congratulation on the 7.5 score. And there are a lot of young people who are sitting there and saying, so if you've done everything, what is it that is left for us to do? And the answer is, as we just heard, there is a lot more. I'm going to shift gears now because we have just about 20 minutes. And I'm going to ask two things. So I'm right now reading this book, Why Nations Fail. And there are two things that essentially jump out at you when you think about why something succeeds or fails. And one he talks about is the pivotal moments, and the other he talks about is the institutional infrastructure. And that essentially accounts for where you go. So I want you to talk about what are the pivotal moments now, and what are the three things that you would like to be tracking going forward in the next 2 years, 5 years, 10 years for this journey to become, in your words, to cover the remaining 2.5 that remains, and what would you like to track over the next, what are those pivotal things that you would like to track? You want to start
Yeah.
first, please?
See, in the next 2 years, of course, we would like to see, you know, the digital financial access of these accounts. That's what we would like to look at. And we also want to look at, you know, the consumer protection. That's very important. That's an immediate thing that we have to look at because these are all accounts which are, you know, either done through the AEPS or through the, you know, the ATM card. So data protection is very important, and we have also looked at, you know, the way the mule accounts are being opened and operated in the country. So data protection is the most important part of it right now. For this, in the next 2 years, I would like to do. The second, if you look at in the next 5 years, what would I like to have is, you know, the financial product penetration of these accounts. That's very important. Just opening an account is not enough. That's what I said in the very beginning, and so that's what is necessary. The another thing that we would like to have in the next thing is the technology adoption in these accounts, like CKYC, RKYC. All these accounts, can it be digitally accessed, digitally done, and instead of, you know, putting the people into pressure, the financial institutions into pressure, can it be totally done through the digital system? Is what will be the next 5 years terms.
Yeah. So before that, I just for me, Shinjani, I mean the country really started changing and laid the rails for growth of financial services and development when the telecom revolution started. Laying those rails was very important, right? Connecting the country first, including them in the communication inclusion was actually much more important than, and then you get more information and you get more connected. You can talk to people. Then transportation, the roads that we have built in the last 10 years or last 15, 20 years, especially in the last 10 years, the work we have done, the India road network is actually doubled. So you're taking development deep into the country. And I think that's very, very important. I was sitting with somebody I was in Japan last week, and I was meeting some U.S. investor, and from one of the investors of the bank, and we were talking about the payment systems and the comparison of our payment system with what's happening in the United States, and he was saying, oh, what we have in the United States is absolutely archaic, right? I mean, they can't, it's just, it's a decades old system, and just they're doing what they're doing. We are leaps, and we are miles ahead of the rest of the world. So I think we should be very proud of what we have achieved as a country in the last few years. And and when I travel, I was on the board of, I was a director on the board of CSC till recently. CSC is the Common Service Center, CSC Governance Services Limited. I was a director on the board, and we partnered with them, and that took me as a board member and as a business partner. It took me to deepest parts of the country, and some of the examples that I see when I meet people in deep villages, CSC guys trying to deliver services from financial institutions or other services to deepest parts of the country, it kind of is very encouraging, and it kind of gives you confidence that the country really wants to move forward. The third thing that is happening is whenever changes happen in the country, people who are gullible, people who don't know much, change actually starts when people come together. And for want of any other example, the Amul revolution in Gujarat was such so when entrepreneurship and collectivism comes together, that's when you start seeing more and more development. So when I look at entrepreneurship and collectivism coming together, and we are doing some stuff now, the government is taking some steps towards that, and where people can jointly negotiate, can jointly get benefits for themselves, etc. That's very, very important. I mean, that's how I
Sure.
look at it. So
So before I turn to Mr. Tonsi to ask about what metric he will track, because it's very important for all of us, I want to ask you, sir, what metric will you be setting for the rest of us?
Actually, we have done a very good job at opening the account, but as other panelists have spoken, now the issue is how to motivate people to use it, and that too without DVD transaction. DVD transaction is a part, like government is sending the money to this account is well known, but how to make them use this account in day-to-day life. Uh, at the same time, it connects with the like formalization of the economy, cash economy. We can also say the aim of the government is to facilitate moving people from the cash economy to digital economy, or like digital money. UPI has done a great thing, but we can't say that cash economy can be wiped out. There are always small businessmen, small vendors, and other all kind of people who are dealing in cash. When some customer is paying in cash, the poor man on the ground who is selling vegetable or some other good, he has no option to say कि भाई आप मुझे UPI में दीजिए. So the challenge here is like he at the end of the day he has some cash and he doesn't know how to deposit it in his bank account. The banks are far away. BCs are generally like mostly they are used by people for withdrawing money. So how can we make the depositing of the cash? So enable the system where in every market, in every nook and corner, the person who is having cash, he feel like he can go just to the next street or somewhere close by, deposit the money, and then you can use it in the day-to-day transactions, that banking money, and that will also give you a lot of data to the entire banking community, uh, like how much money the person is
Yes.
transaction is earning in a day, or how many transaction is making in a day.
Yes.
So I would look at metrics over three different time horizons, right? So first is here and now,
Yeah.
and getting benefits of what you've done, getting that to level, let's say a couple of years from now, 2 years from now. So there we would like to look at active account usage, UPI penetration in rural areas, women financial inclusion in account holders, operative accounts, etc. That's a 2 year time horizon. 5 year time horizon, one will look at least MSME credit penetration and formal participation in the system, financial literacy rate, if there's a way to measure that, and the decade or so, in the next decade, like we've done something in the last decade, I mean, we would in financial inclusion getting a lot of people under pension schemes in the country so that their long-term incomes are protected. Globally best in ranking in financial inclusion, World Bank or whoever does the ranking, one of the top 2, 3 in those rankings, etc. So
Sure.
the 2, 5, 10 year kind of horizon. Yeah.
Sure. So, Munish was worried that I haven't yet mentioned women's financial inclusion, so I think he just had to interject. So, before I come to you, sir, to understand what metric are you tracking, because I'm sure SBI has thought through this already. I want to just summarize so far what we've heard. And what we've heard is we need to be ready to start tracking usage, transactions, data and what it's doing, safety and security of these accounts, building the trust, changing the mindset of people to use these bank accounts as the last mile. But also, one of the very important things that we are hearing, and I want you to specifically respond to that, is the aspect of service delivery at the last mile. Because I know that we talk about digital, but a lot of the service delivery continues to be a matter of feet on street, and this is a very large country. So product penetration as well as service, the two major things that we are hearing as future milestones to track, are critically pivoted on the availability of infrastructure, digital or physical. State Bank of India being the largest, I want you to respond to that specific thing. Feet on street and digital service, trust building on the ground, how are we going to do it in the next 10 years? Or 2 years or 5 years like Munish broke up?
See, there are certain advantages that a large bank with a large network like ours has. But then I think this is too large a number we need to cover, and it is just not possible with the physical bank branches. Today we have gone digital a long way, very, very long way, and our apps are being used in places where we could never imagine that they would be used. And people have become so savvy today. And because the ease of use also is very, very critical. Like, for example, we don't even have to teach many of them. Like maybe WhatsApp, none of us were trained to use WhatsApp, right? We just learned it because we felt it was useful. Similarly, going on a YouTube and watching videos, no one taught us. We just went there. Similarly, today, you see a lot of banking apps also being used. This is to address your particular thing about digital inclusion. It will happen, but then more awareness is needed. Now, going back to the metrics, which is what we were discussing, I would look at two aspects. If you look at a taxonomy, then I would look at primarily it would be penetration, the numbers. We still need to achieve that. And also now, after the Jan Dhan, we need to move into Jan Bima, insurance for all. By 2047 is what India has an aspiration of achieving. I think that also slowly comes into the play. Apart from the penetration, now how do we increase the quality of this penetration? And the secondary I would look at is on the demand side as well as on the supply side. There's the physical access which we are able to provide, and also the usage that happens, increase. I think these are basically the matrices which I would track.
Sure. So we put out a big ambition on the table here, and that ambition, if I can sum it up in a sentence, is to have more resilient population from or based on top of this infrastructure of 7.5 level achievement over the last 10 years. So we want to now move to a state of resilience. People have more financial security, they have better household income. So we have spoken a lot about this now. I have very little time, and I am going to come back to you for a brisk round of answers on the institutional infrastructure that is required to make this happen in the coming years, and what needs to stay, what needs to be scrapped, or what needs to be strengthened. If we can have your comment starting with you, sir, then I think that's our last round, and if I have time, I'll open for questions.
Uh, I think ease of access is the most important. Like the branch network has expanded like anything. Now there are business correspondents. So more and more facilities need to be added. More and more facilities need to be added to the mobile apps. More digital centers like DVUs have been opened, around 100 of them throughout the country. but more such places where younger generations can go and access the banking facility. Plus, like more app-based lending, app-based enrollments. So I think these are required. Regarding scrapping, I don't think we are in that phase yet where we can say that either physical branches are not needed. Uh, but I think more coordination between different kind of banking institutions and other like that DPIs where the databases are remaining, so that we can identify, we can build our databases, credit histories, KYCs can be strengthened. I think that should be need of the hour.
Sure. You, sir?
Uh, Basically, if you look at the institute, nothing to be scrapped. I think it's only to be enhanced. Whatever we have done has gone right for this last 10 years or a little more than that. We will only need to enhance, and I know this has become so cliched to say this. Let us not compete, let us collaborate with all the fintechs and all that, but it makes tremendous sense in this aspect. We need to have the last mile. You're talking about the feet on street, as also the physical access which the fintech players can provide, because there is a limitation as to the physical distance we can cover, right? One aspect. Secondly, institutionally, I think some forbearance on how we make an account, inoperative or otherwise, which has to become an institutional framework. Maybe we should have a little more tolerance towards this, because we are dealing with a very, very difficult population. I think that is where, that is what I would like to.
So when I asked for scrap, and the two of you have the opportunity to respond to this, what I meant were there are regulations that were written 10 years or before, which continue to exist today. And if we are talking about pivotal moments and how institutions can shape this future to move from financial inclusion to financial resilience, what are the things? So for example, I'll give you my example. I think that doing different KYCs for different product level KYCs for the same customer at this customer acquisition cost is something that needs to go if we want to really scale these things up. So I want examples like that, if we can talk about this.
So I'll just respond to that. Shini. You were also talking about how Amazon uses the data and how they were able to do it. So that's what I would like to have, that GST is already there, UPI is there, CKYC is there. So what we need to have is the totally data-driven innovation. That's what we would like to have. And secondly, you were also talking about a lot of feet on street. Of course, the business correspondents and the bank mitras and the bank sakis. Can we do a lot of innovations on the digital side with regard to that? That's another thing that I would like to do. And the third thing, of course, is the distribution network. That's something like, even today, there is regional disparity. So it is only the digital which can penetrate. So we need to do a lot of innovations on digital, how to access to the last mile. The MFIs, the NBFCs, and the rural banks are doing a lot of work. Even the financial institutions and the commercial banks are doing a lot of work. But if digital becomes a big game, then I think all these problems can be solved.
So Munish, what needs to go for digital to become the next big thing?
Yeah, so the way I look at it is, of course, panelists have said about data, digital, better coordination amongst institutions, regulators, all that stuff has to happen. And, for India to really take that quantum leap into the future, I think that's much required. But I think some of the stuff that India has done well in the last 10 years is from an institutional side also, it has to attract a lot of capital into this economy. And both the state capital and the private capital has to be kind of drawn into this economy. And to do that, it has to lay the guardrails for protecting that capital and generating return on that capital for the investors, right? And that's the best way to build a sustainable economy in this part. So some of the stuff that we've done, you look at some of the stuff that government has done in the last few years, all the guarantee schemes, for instance, after COVID that we launched, which has paved the way for institutions to step in. We made some mistakes, but we gone in there, and we know it gives you the framework of going and dealing with people who are hitherto unattended to, right? So stuff like that, I think we could do more on that side, creating, across the ministries, across the regulators, etc., creating an architecture where all the data can be used together. For instance, I know Ministry of Agriculture was trying to do something. I know now, some Ministry of Cooperatives was trying to do something around PACs, primary agriculture cooperative societies, which is bringing the power of collectives together. FPOs are, kind of in deep markets are coming together. I think those regulations can be a bit more forward-looking and and simplified. So I think all of that will help attract capital into this part of the economy.
So that's a great point on institutional collaboration to ensure the right alignment of incentives, because I think the whole thing pivots around that, because there are multiple participants who are going to make this ambition happen. And if incentives are not aligned, because incentive alignment is not an exercise that we periodically do, because we probably did it at some point of time because the government wanted everybody included, and therefore a series of steps happened. And now if we want to move away to financial resilience for households, we need to see what type of incentive alignment happens. And another very important point that you make is about the data and the sharing of, and we were talking about it in the before the panel, how do we get access to this data that is lying in different cupboards of different ministries, and it is all digitized, it is all available, but the framework for that collaboration to happen, these are the type of things on which we will be spending time, I'm hoping, for this to pivot to the next, to the great, story of success that we want to script. My time is up, and do I have time to give any questions to this panel?
Shinjini,
No?
I just wanted to add one point when you talk about institutional infrastructure, because we see, I see a lot of the audience who have been involved in financial inclusion for quite some years now. My mind goes back to 2013 when I personally saw the original definition of what we wanted as financial inclusion. It was actually, we had three pillars there, right? Access to formal financial structure, and then also access to insurance and access to the capital markets. That part is, I think, is still distance away. But if we look at the institutional part, I think we should look at all these three and how do we build without putting the eventual population at risk, particularly with the capital markets. So, allow me to say this, maybe we should be looking at Jan Dhan, which we already have, where we scored at 7.5, in my opinion. Then Jan Bima, which also is going a very strong way. And then, if I can call it that way, Jan Nivesh, maybe micro SIPs, before that micro insurance. I think this is where we now should start looking at the institutional infrastructure that is needed.
Agree with you. Anything you want to add to that? And sir, anything you want to add? Okay, we've said you can interact with the panel afterwards in your free time. Thank you so much. Thank you, everybody.
Thank you, esteemed panelists. Thank you, esteemed moderator. May I request you all to please join us front and center for a photo op. And we now move on quickly to the next session. I request the event team to please prepare the stage for the next session.